It was truly a confluence of events and people that gave birth to the idea. But the first piece of this puzzle was really the engineering campus at Stanford University.
Sitting with the young men and women in the class, oftentimes the question was asked of me. It said, well, if I start a company, be it in civil engineering or a related activity, where do I get the money? How do I get the money? Who do you go see? How do you see it? And it didn't happen once, but a number of times.
This discussion was not a unique one on the Stanford campus. The intersection between technological innovation and education had been taking place there for decades. It was on land leased from Stanford that Very & Associates opened in 1953, soon to be followed by another electronics company called Hewlett-Packard.
Dr. Jim Gibbons, who was Dean of the School of Engineering and a very dear friend of mine, I believe was asked by Bill Hewlett to say, why Silicon Valley? I mean, what is so unusual about Silicon Valley? Why hasn't it been duplicated in other areas?
The answer was a unique convergence of powerful forces, including 4 great educational institutions, talented entrepreneurs, a flourishing electronics industry, and plenty of venture capital.
It's really the late 70s, early 80s, do we start to see the full set of venture capital companies, the full set of service providers, where entrepreneurs feel like they have a relatively good range of options in a whole lot of areas that I would call a stage 2 of Silicon Valley. I think stage 2 was really the rollout of the broad infrastructure, and that's where I think Silicon Valley Bank's been a really important part of that.
Well, there are several elements that are part of the brew of the success of Silicon Valley. First of all, a strong venture capital community has been key. And the best venture capitalists originated here and are still here.
In the Valley, venture capitalists were already gambling on tech startups and reaping big rewards. But the banking community was geared to a different business model.
Well, they weren't funding startups. They weren't making loans to startups that didn't have some kind of a profitable operation or an operation going, was the basic mentality of banking at that time.
Then in 1982, an act of Congress and a 2-hour plane ride would allow 2 longtime friends to make banking history.
Coming back home to San Francisco, I happened to pick up the brochure in the back of the flight seat, on the seat in front of me, and it was Reagan's program for the deregulation of the banking industry. And all of a sudden, it just became very, very clear to me that what we ought to do is form a bank geared to the technology that's occurring in this valley.
We decided let's have one where we really specialize in startups, get to know them, the product and the people.
And you really want reinforcement when you do this. One particular group that we have had a long association with was a group of guys. We play poker. We started playing poker on once a month, and we used to do it on Friday, and we'd smoke cigars and have our hats on.
And it was over one of these poker games, I believe in April of 1981, down in Pajaro Dunes, where they got to talking about the idea of Silicon Valley Bank. They were interested in not just the underbanked, but the unbanked needs of these tech and life science startup companies that were springing up like wildflowers all over the valley back in the early 80s. So Bob and Bill had kind of come up with an idea of how to serve the needs of these companies, and they began to vet it around the poker game. And when the poker game was over, they kind of settled on the idea of what came to be known as Silicon Valley Bank.
We had 7, I think, in the poker group, and they all were investors in the bank once it started. And I've been very happy that they were.
Then what we did, after getting the legal and those put to bed, we started looking at, well, who's really going to run this bank?
In order to get a charter, the founders needed to name a president. And in order to be successful, the company needed a dynamic leader.
Well, I was playing tennis. Bill and I belonged to Foothill Swim and Tennis Club, where he had been president of the club at one time, and I was later, many years later. But I was playing tennis, and he said, "Hey, could I see you after you play tennis?" I said, "Sure."
I personally always felt Roger was the ideal candidate.
Roger was, in the Wells Fargo, he was an unusual character. He was extremely bright and aggressive and innovative.
As a very young officer, I had opened Bill Biggerstaff's account at Wells Fargo in Menlo Park when he came from, I think, Ford Motor Company to join Wells Fargo. So he was always Mr. Biggerstaff because he was a big executive.
He was a good contact man and aggressive in chasing business.
So I always remember, I said, "What are you thinking about the name of the bank?" And he said, "Silicon Valley Bank," and I thought that was a great name.
The team devised a strategy to capitalize the bank that relied on networking and salesmanship, philosophies that would become keys to the bank's success.
And we went after it with the founders group. We concentrated early. All of us called on the people that we knew and thought of who we knew in the various industries.
I called Bob Noyce, who was as good a guy as there ever was, and he said, "Roger, I understand what you're trying to do, but if I'm a founder of your bank, it will make my phone ring more." So he became a shareholder.
Well, I thought it was a bold idea. We didn't think of banks as being an integral part of helping young companies grow. We thought banks appeared when they reached later stages of maturity, when they had assets to pledge to secure loans. But the idea of a bank making capital available to an enterprise that really has its assets go home every night was really a bold, unique thing.
These were people that I trusted. And the idea of an entrepreneurial bank was a good one. And that I knew that's the kind of thing I would be willing to get behind. And that's the reason I did it.
Everyone we talked to ever in my history at the bank always knew somebody or knew of somebody on our founders list.
The team wanted to be close to the companies they would serve, so they chose an office building at 2262 North 1st Street in San Jose.
Well, we first had to prove there was a demand for a bank. So we hired a consultant, and we proved that there was an unbelievable demand for a bank.
But we found in the studies that there were some 186 companies that were headquartered in Silicon Valley and the Golden Triangle, and out of about 290 companies in the total area in the Golden Triangle. So, and there was no bank in there.
We originally had the idea of this three-legged stool, which was technology, normal commercial banking, and real estate as being a third of the bank. And so North First at that time was sort of the center of the technology industry.
And people were quite amazed that you would open a bank in an industrial setting. I think we may have been the only bank to that time ever who didn't open in a Main Street location.
Silicon Valley Bank opened for business on October 17, 1983.
Well, I remember walking into the bank on the first day in 1983. There's probably less than 20 employees at the time. We had only one office, which was that little lean-to office out on North 1st Street.
They had a couple of desks and some card tables set up and a couple of phones. So the earlier you got in, you got a desk compared to sitting at the card table.
They walked into Silicon Valley Bank on North 1st Street, and as my wife described it, she said, it looks like an insurance adjuster's office. It didn't have I couldn't find a teller line. It was a little rabbit warren of offices here and there, no structure, but there was an energy there. Everybody felt they're on a winning team.
And we said early on that we wanted to be like a law firm. And that's why we always said our customers were our clients. We never used the word customers because we felt other banks had customers, but we had clients like a law firm.
Thriving on a sales culture led by Roger Smith, the early years at Silicon Valley Bank were marked by impressive growth.
Silicon Valley Bank at that time was extraordinarily, it's a cliche now, but extraordinarily entrepreneurial. And it was really filled with a bunch of people that were really not interested in being bankers.
The real key to the bank was
the people we hired.
It was really getting the deal done. Deal junkies, if you will. And Roger Smith, I think, drove that.
It's arguable whether many of us were employable at other places. We were very independent people, very self-motivated.
Everybody who came aboard had it in them to be a salesman. They wanted to do it. I think Bill Biggerstaff is a classic example. The man, I remember when I worked with him, he was in his 70s, and he's beyond that. He'd fire out of that chair, his first one to work, second one to work, I guess. He'd be out. He just wanted to bring the clients in.
Sandy had my name, and so I went and said I'd like to come and meet you and talk to her. Leonard Bostock was working for Stanford, and he put together a network for the Stanford computer system that was unique.
Bill would always tell you the story of how he first met the founders of Cisco Systems basically in their kitchen. They started their first computers, and they had their first operations right in their own home. And Bill went to their house and made them their first loan to buy some computer equipment.
I can remember when Vinod Khosla came into my office with a 3-page business plan saying he was going to his company was going to be bigger than IBM. Of course, the company he founded was Sun Microsystems.
Bring in deposits. I mean, it's pretty easy. I mean, Roger was pretty simplistic. I mean, about what he wanted us to do. So, get in deeper with the VCs and bring those companies that they invest in as a client of the bank ASAP as soon as possible.
And really, for Roger, it was the Al Davis School of Banking. Just win, baby. Didn't matter how you did it. Don't give me any excuses. Don't tell me how you did it. Just win.
So we had people working very hard. I mean, people worked very hard because I think they enjoyed what they were doing.
In March of 1986, Silicon Valley Bank announced its merger with National Intercity Bank of Santa Clara. With this one strategic move, the bank doubled in size overnight.
We were at National Intercity Bank in the kind of real estate general business area, but primarily doing very well in real estate.
I think we were about $100 million in total assets, and we needed some more capital. And that's when we met the folks at National Intercity Bank.
And I think they saw us as putting another leg in the stool because they were heavily involved in technology.
They had specialized mainly in the general commercial and the real estate area. And and they had a real nice building over on Lakeside, which was nice. And it was much fancier than we were accustomed to.
Roger wanted the building that they occupied that sat right on 101. And the first thing he did was put a massive Silicon Valley Bank sign along the side of that building that everybody that cruising down 101 could see.
The merger created significant growth in the commercial and real estate portfolios, and by early 1987, SVB was the leader in construction financing in Silicon Valley.
The pace was unbelievable. But I was in the real estate department at the time, and we had construction loans. And we had, deals and the end of the month getting every new deal in.
The real estate division's job was to be essentially a sponge, to soak up the excess deposits from the technology group and redeploy them as high-priced construction loans.
Quarter after quarter, we were banging out the numbers, always beating the last quarter significantly so.
By funding startups, the venture capitalists were also fueling the bank's financial growth. In 1989, the bank made another strategic move, this time to strengthen its ties with the VC community.
The epicenter of where the VCs are in the world. I mean, there's more VCs per square mile up at Sand Hill Road than there's any other center in the United States or globally.
Most people know now it's a very rich deposit area, the technology companies that get money from the venture capitalists. And so we relied on the venture capitalists a lot.
We got to know the certain category of VCs that were really looking for a bank to help their portfolio companies grow.
But we didn't have a person specializing in that. So when we were able to hire Don we said, let's also open an office at Sand Hill Road. And Tom Ford, who's a wonderful guy who's now gone, had been after us for a long time to open an office.
And it was a deal. If we opened it, Tom Ford, who ran Sand Hill, said no other bank will come in here. So we had a leg up there.
And a lot of those investors, again, we've known for years and years and years. We will go the extra mile to work with their portfolio companies and probably go out in the risk curve a little bit because we understand them and they understand the bank.
As the decade came to a close, and with its recent IPO under its belt, this entrepreneurial bank had proven to be a winner. With the new decade came national expansion, as the bank opened its first office outside of California on Route 128 near Boston.
SVB opened on Route 128 in Wellesley, which was kind of a precursor to all the other venture capital firms moving out to 128 from downtown.
We picked Route 128 for a couple of different reasons. The first one was we wanted to make a statement. We weren't like the other bankers in downtown Boston. We weren't the stuffy guys in the blue pinstripe suits with the white shirts and the red ties.
Oh, we were much closer to the client companies. It made it much easier for clients to visit us as opposed to driving downtown Boston and paying $20 to park.
That very first day, we didn't have any furniture whatsoever. The furniture hadn't arrived. We got a call that it wasn't going to come for several weeks. So on day one, we found a bunch of cardboard boxes and literally made some makeshift desks out of cardboard boxes. And on day two, we brought in our lawn furniture.
We were really happy. We knew we were getting some guys that really knew the business and that had beaten us on deals.
Just the kind of guys we like. They worked in a little office. They were lean and mean and smart and bright. They're just our kind of guys.
Silicon Valley Bank continued to expand to technology marketplaces outside of Silicon Valley. But at the same time, trouble was brewing a lot closer to home.
Going into the very late 80s, we were riding high. And if you want to look at the old figures and get the charts out.
We had the cheap deposits being supplied by the high technology group, funding the high yield loans in the construction. It was a great strategy if you knew when to get out.
And in the early 90s, we began to have difficulty because the real estate market was sort of tanking. It had overbuilt.
Other banks around us had dried up their real estate funds, and they weren't giving out the large loans when we were still booking them as fast as we could.
Well, it was a recession, and the door slammed shut on the real estate market. And we didn't have just our foot caught in the door, but we were inside the house feasting on real estate loans. We had over 42% of our outstanding loan balances in real estate at the absolute worst moment in time.
The real estate woes came to the forefront in the third quarter of 1992 when the bank revealed a $9.4 million loss. This signaled the end of an impressive 21 consecutive quarters of year-over-year earnings increases.
Well, we had trouble with our regulators from the beginning because they did not understand what we did.
Very few people, I think, really understood just how close we were to imploding.
And the regulators were now had something to really put pressure on us, because before we would say, well, we're the most profitable bank in California, what's wrong? But now they could tell us what's wrong. You got these bad loans.
The pain of the last 2 years is a pinprick compared to 92, roughly 93, when we were hemorrhaging all over the floor.
What they could see was fast growth and bad loans.
You know, our whole thrust those first years with Roger was sales, like all startup companies. And we did that. We did that very successfully.
The declining real estate market was a cause, but I would say then we were more culpable in that our own internal mechanisms were not in place.
After almost 10 years of unwavering success, the bank was in rough waters and under regulatory order.
And we came under what was called a cease and desist order. And if that sounds bad, it is, and it was.
My office at the time was right next to Jay Cairns, our chief credit officer, and one door from Roger. And it got very edgy for all of us because people kept going back and forth with suits and ties and briefcases.
Here we'd been going around for a year and a half telling everybody that unlike all these dumb Boston banks that had gotten into trouble on real estate, that we weren't like that. Silicon Valley Bank was different, and it wouldn't happen to us.
Then the regulators came in and started reviewing not only the real estate portfolio, but then the technology portfolio, the entire credit culture of the bank.
It was scary, and all of a sudden our leadership was not as confident and cocky and at risk.
We did not pay enough attention to policies, procedures, all the infrastructure of a company, and we had gotten so big.
Those level problems were second level problems. When you're on a ship and it's leaking, and the captain is not the right captain to get us through the storm, and you're saying, all right, we can't do anything until we get a new captain.
The regulator said to us at the end of December, they said, we want you people to have a new CEO on board April 1st. And we're not kidding.
If we hired wrong, I don't think we could have recovered. We were that close to it. And so it was super important that we hire the right person and get them going quickly.
The biggest fear we had when we went to find a new CEO is we were not going to be able to find a CEO who understood we really weren't a bank. So we were afraid of losing the culture by bringing in a real banker's banker.
I can remember sitting down with Director Wells after the first 3, and we were both so depressed.
I was one of 4 final candidates, and they asked me, why Silicon Valley Bank? And without thinking, I remember saying to the board members interviewing me, Dan Kelleher, Ann Wells, and others, that this is a gold mine.
With John Dean, 15 minutes into the interview, I said, I think we got our guy, to myself. I said this out loud. 15 minutes, and this is extremely unusual.
John Dean arrived as the new president and CEO in April of 1993.
John's first question to me was, so I understand we have a little real estate problem. And my head fell and my eyes were downcast, and I said, well, yeah, we have a real estate problem. And he says, well, if you don't mind my asking, how big a problem is it? And I said, well, it's about $50 million. And he laughed. And I looked up at him like, well, what's so funny about that? And he says, oh, well, excuse me. He says, but you need to understand that I come from a bank that has a $500 million real estate problem. He says, $50 million is nothing. We'll fix that like this.
Everybody was under a lot of pressure. John Dean came in and he was like a breath of fresh air.
John's confidence and enthusiasm was absolutely contagious, and we needed that, because if you were still there, it was because you believed.
I believe I interviewed with John on it was either the first week or first day on the job. They had me come in, talk with John, and John sold me.
And that was the most valuable thing I think that John brought to the bank, was a restored sense of confidence. He made us believe that we were going to be a great bank again.
The bank moved quickly to satisfy the regulatory order, working out problem loans, creating policies, and implementing systems to support growth.
Real estate loan problems had to be fixed immediately. Had to get the regulators, without them listening now, off our backs. Had to build the infrastructure that didn't exist in the organization. And we had some strengths, but we also had some challenges in terms of management structure and people in place.
The thing that kept us most successful was our ability to focus on our strongest market, the technology and life sciences market, the venture capitalists that feed us that business.
I'll always remember the faith that the VCs had in Silicon Valley Bank in 1993, 1994.
John's real contribution in those first couple of years weren't in terms of changing the strategy at all. In fact, the strategy was a pretty good one. What he did was a couple of things. One was get us back on track from an infrastructure point of view.
Looking back, of course, we did it as the regulators guided us, and it was you build a platform so now you can become much bigger. Now, of course, after that, then we started our national movement, opening so many offices nationally.
The changes at the bank came at an opportune moment in history. By 1994, the internet had grown into a community of more than 25 million users, and the demand from both consumers and businesses for more dynamic hardware and software was fueling a new technological revolution.
The economy starts to boom, and we're entering into what will prove to be the biggest bull market in the history of American capitalism.
It was a huge acceleration, and it was largely driven by the internet. There was a general feeling that this was a fundamentally altering technology.
Other competitors were coming into the market trying to emulate our model and doing it in a way that we knew was not sustainable long term.
And even with some competition from Imperial Bank, a little bit from Fleet, a little bit from Greater Bay, it still didn't put a dent into the deals the bank was doing.
As the technology industry's growth spilled out of Silicon Valley to other parts of the country and the globe, the venture capital community moved to support it, and so did Silicon Valley Bank.
In the mid-90s, the technology communities in different parts of the country really took root. Places like Seattle and Boulder, Austin, Texas, and Northern Virginia.
We already had an office in Boston, Southern California, Northern California, Oregon.
And for us to be successful in those markets, we found very quickly that you had to be present in those markets every day. You couldn't just send somebody in to be a carpetbagger. You had to be there with the people every day.
So we went from 3-4 offices to 22, 23, 24 offices. We went from 2 or 3 products to 40, 50, 60 products. And it gave us huge growth opportunities.
And entrepreneurism is spreading globally. There's no question about that. And the VCs are spreading globally as well.
If you go over to Israel today, which is a much more mature technology market, a lot of those people will say Silicon Valley Bank was a pioneer in Israeli technology. We were there.
In addition to growing geographically, the bank also broadened its product set.
When we first joined the bank, we had basically 2 products. We had a working capital, receivables-based lending on the one hand, and on the other hand, we had, as Roger Smith used to call it, the tax-free checking account.
A couple of years would go by, companies starting to reach the point where it can ship product. And they would say to us, gee, maybe we're going to have to bring in a second bank now, like Fleet, by way of example.
Our portfolio companies became more sophisticated, and as our desire to work with them longer became clear, we knew that we had to have a more sophisticated product set to keep up with them as they grew.
Shortly after John arrived, a lot of people in the bank that had always wanted to have those products started to raise their hand and push for them. So about the 93, 94 timeframe, we started to build international banking products and cash management products.
In the mid-1990s, the bank embarked on a strategy of niche specialization in its technology portfolio as a way to leverage expertise against the competition.
As we developed our strategy, a suggestion that came out, not from me but from the team, was to better differentiate ourselves from other banks that were trying to mimic us, is that we need to do niche banking.
All sorts of different specializations, and that proved to be a real success factor for us.
Because we had enough concentration, size, that we could differentiate by technology segment. And it really did stand us apart.
Eventually, the bank looked to evolve the niche strategy by applying it to other underserved markets outside of technology.
In the early 90s, when we had the 3-legged stool approach, it became pretty apparent that we needed to find something new in the commercial side of our business.
Jim Forrester came up with the idea of the niches or the underserved markets.
I thought of a half dozen different businesses that we could focus on, things like mortuaries and factoring companies, but none of those had the appeal of the premium wine industry.
I can remember the day Rob McMillan told me he thought the wine was a great idea, and he was originally, it was going to be beverages, and we were going to try and do a lot of other things. We had some great clients. We had Pete's Wicked Ale, and we had Adwala Juices.
We wrote a business plan, vetted it through the entire organization, board of directors all the way on down, got everybody to really buy off on this thing. And it stuck. It had some resonance. People thought it was a good thing.
John Dean and Rob McMillan came to visit here at St. Cyprian about '95. And I spent a couple of hours talking with them. Of course, they're a lot of fun to talk to. I showed them around the winery and talked about what was going on here and learned a lot about Silicon Valley Bank. And the upshot of that was that I was very impressed with Silicon Valley Bank and thought, wow, here are some bankers who really understand our business and who see it as an opportunity rather than a problem. That was very welcome.
While John Dean and his management team placed considerable attention on strategy and growth, this did not come at the expense of focusing on the people and the culture.
And I always thought John Dean probably had a formula for how to fix banks. So he'd come into a bank that was broken, and he would create a headquarters building. He would create an employee stock ownership program so that the employees' interests were aligned with the success of the company. And he would also seek to discover the values of the organization as a way of developing a culture.
So it goes back to execution. And execution to me is how you build the culture. In great companies over time, research has proven this, great companies over time have guiding principles.
So he asked several of us to try and figure out what these values, or what we came to call principles, were. So we went through a process and we came up with these 8 words that we now call the guiding principles. But I've always felt that the importance is not attached to the words themselves, but more to the commitment we've made to behave in a way that is better.
When you build the culture where people collectively feel, I own this, I own a piece of this, great things start to happen.
In the latter half of the decade, SVB continued to position itself as the nation's premier technology bank. SVB was perfectly positioned to take advantage of the tech boom, which was primarily being funded through VC investing.
We saw a huge increase in investing in a number of companies, a huge increase in funds, big increase in number of partners, people doing deals. And it was a little bit frightening from the inside.
We had an entrepreneur, I think he couldn't have been more than 21 years old, that had walked into our office, was going to determine whether we were the appropriate bank for his newly minted company, and one that Sequoia just funded.
You know, you'd read stories of somebody giving a pitch in the morning with 5 PowerPoint slides and lining up $20 million by the afternoon.
Lo and behold, 3 months later, this company got acquired by eBay. I think it was literally 3 months after Sequoia funded them. They got $150 million for the company, and that 21-year-old entrepreneur made $50 million out of the sale.
And of course we had, wide open vista in front of us, huge opportunity, and all we really had to do was make sure that we were adding salespeople and offices fast enough to keep up with the growth.
There's no doubt that the stars lined up and that we were perfectly positioned. I will argue that that wasn't an accident, that we had worked really hard on building the brand that we had, and that to a certain degree, were we lucky that things just went absolutely bananas? Yes, we were. But were we smart that we were positioned to take advantage of it? No question.
With the tech spending boom, Silicon Valley Bank's net income soared 204% to $159 million in the year 2000. And in the first quarter of that year, SVB was named the best performing publicly traded bank in the nation.
What was great about that time was that we all felt like we were getting rich.
And then the stock would split. And we'd all think, boy, and there it starts growing again. And it would be $20 a share, and then $30 a share. And then we'd split again, and we all were sitting there counting our money.
If you think of $8 a share, at the peak it went to 65, but we had split it already twice, 2 for 1. So 65, in effect it went from $8 a share to $130, $260 a share.
It was energizing, and it was uplifting, and people just felt so excited every day when they came to work.
We were smart enough and disciplined enough to ride it, and ride it hard and work hard. Nobody slacked off here. We were making a ton of money as an organization, and nobody rested on our laurels.
In April of 2001, John Dean stepped down as president and CEO of Silicon Valley Bank. In his place stepped Ken Wilcox, an 11-year SVB veteran.
I didn't happen upon Ken. Ken happened upon me.
And in 1994, Glenn ask each of the employees to fill out a survey. I think it was so that he and John could get a better idea of what the employee base was thinking about. The last question in the survey, as I recall, was, what is it that you want to do longer term here at Silicon Valley Bank? And I'd written in there, I want to be CEO.
What attracted me to Ken was, well, it's not a thing, it's several factors, but first it was results.
And Ken was so key to us when we opened the office in Boston, because he and Dave Fisher were the main contacts with the clients, the account officers, so to speak.
Ken's not your stereotypical CEO. He's not a cheerleader, he's not a backslapper.
He is probably one of the smarter guys that's ever worked in this organization, and had been a professor, and I don't think we ever called him doctor. We should have.
He spends a lot of time thinking about culture, about long-term strategy, about ways to communicate that and infuse the organization with that.
I think Ken has not only the ethic of values, the ability, the knowledge, and a proven track record.
By mid-2001, much of the momentum behind the tech revolution had dissipated, and a deep economic recession was soon to set in. While many thought SVB would implode, its discipline during the boom proved invaluable.
I think everyone got caught up in the frenzy. Everyone made bad decisions. I think it's just a question of what degree your bad decisions were.
During the height of the boom, if we had lent a lot of money into the dot-com arena, we certainly would have gotten hurt to a much greater extent than we did.
We were very cautious in the internet sector. We didn't see the ongoing sustainable value of those brands.
Ultimately, we concluded that we couldn't lend to the dot-coms in a way consistent with how we had successfully lent to technology. So we essentially said that there are other non-credit banking services that we could provide to the dot-com community.
We invested in a lot of new products and services. We just kept right on investing in products and services. So today, about 25% of our bottom line comes from products and services that, for all practical purposes, we didn't have 3-4 years ago.
One thing that the downturn's done is given us the courage of our convictions. It's shown that we can stick to our guns and do the right thing for ourselves and for our shareholders and our depositors, and be strong in the marketplace and come out with our respect intact at the end of the day.
The down economy did not stop management from identifying ways to grow the bank.
I think what I admire about what Ken has been able to do, and especially over the last 3 years, relates to our strategy.
As Ken's articulated, our larger strategy is to stay focused on our narrow market niche, where we've continually been successful in the past, but to be able to add more and more value to those companies in more different ways.
It's best to invest during a downturn so that when the recovery comes, you're perfectly positioned to take advantage of it. And that's the strategy that we've pursued.
The bank also broadened its target market to include the lucrative later stage technology companies.
5 or 6 years ago, we really couldn't go after later stage companies. We didn't have the product set. We didn't have the cash management capabilities. We didn't have the international capabilities. We didn't have the investment capabilities. We've built that over the last 3 or 4 years. Larry Fountain, Steve Rogers, Tom Wagner, Tom Bentley, all those guys have done a great job of building out our product capabilities. And that's allowed us to be able to go after the companies that are up to $1 billion in revenue.
I still believe that some of the people like Larry Ellison or Scott McNealy, who run bigger companies, Bill Gates, still entrepreneurs at heart. So really to help entrepreneurs succeed is really what the key drivers and what the legacy of Silicon Valley Bank will be.
And most importantly, the bank embarked on a strategy to diversify its financial services offerings beyond the boundaries of commercial banking.
We've changed our definition of who we want to be. We want to be a diversified financial services company.
And you think about the things that we've done, our whole international department, incredible. The amount of revenue that generates is incredible. Our securities business, wonderful business, gave us a lot more diversity. The acquisition of Alliant.
We believe Alliant will provide a very important role in the growth of the bank in coming years.
by a material expansion of our core merger and acquisition business both in Northern California and throughout the United States. Some of our new initiatives, primarily in the ability to provide institutional private placements for our clients. And who knows, one of these days you may even find us in the equity underwriting business.
Basically, our strategy says that we want to become the preeminent provider of financial services to technology and life sciences and winemakers and entrepreneurial companies in general worldwide.
The entrepreneurial spirit and lending innovation have become cornerstones for a solid financial institution, and staying focused on helping entrepreneurs succeed has helped Silicon Valley Bank succeed.
The wonderment of the Silicon Valley Bank story is not that we were innovative, because frankly, we were located in the midst of a sea of innovative companies. It's the fact that we were innovative in an industry that is so highly regulated that it practically prohibits innovation. That's what's amazing about the Silicon Valley Bank story.
They understand that in the early stages, companies are going to lose money. They're maybe going to do it for several years, and that they're going to have up and downs over that cycle. They're going to require more funding. And Silicon Valley Bank has been very supportive about helping many companies through that period.
They've been very good to our portfolio companies, both in the good times, which is easy, and the bad times, which is not so easy. And what I mean by that is that they've been very supportive of companies who have been low on cash, maybe outside of some of their requirements from the banking standpoint. But they've worked with us over the years with each of these companies, and we've saved some companies.
Literally, on arriving at the company, I found that we were short, on a short-term basis, short of about $2 million to make payroll. I went down to see then Harry Kellogg and the then president Roger Smith at Silicon Valley Bank, and within an hour we were able to put together a package that enabled the company to get funding which met the payroll requirements of that company within 4 days.
I don't remember when I first met Roger and Silicon Valley Bank, probably as soon as you guys started or even before, right? So, but anyway, I started almost from the, if not the beginning. And ever since, every company I've been with, since then is at least 1, 2, 3, 4, 5 companies, right? Still with Silicon Valley Bank.
My business partner of the last 20-odd years is the inventor of packet switching. He's the father of the internet. And he and I have co-founded a number of companies, of which 5 have gone on the stock exchange. Silicon Valley Bank has been our banker. We owe them a lot. They were there when other people weren't. And we've stayed with them through thick and thin. And wherever possible, we've referred them to friends of ours as a bank of choice.
Reinventing an industry. Financing the future. Silicon Valley Bank has done both. And its story is far from over. In fact, it's just beginning.
I think we're real early in the history of the bank. I mean, with some of the acquisitions we've made, with some of the future ideas about acquisitions in the future to become a diversified financial services business serving high-tech and life science companies and private equity. I don't think we've even gotten close to maximizing the synergies of what we have here today and what we might be able to build in the future.
We have the opportunity working with the clients that we have, that being technology, life science, and premium wines, to work with people that are working every single day to enhance the quality of life.
The types of lending that we do and the services we provide just aren't available out there from other financial institutions, and the fact that we really care, and we'll spend a lot of time with very young companies trying to figure out what they need, how they can be more successful.
Again, and it is so pleasing to see the bank and as a very key part of Silicon Valley. And really, when you think about it, as I mentioned earlier, there's now the final 4 accounting firms. There's a number of law firms, but really only one bank that stands out, and that's Silicon Valley Bank, as strong as it is.
I see Silicon Valley Bank continuing to do very, very well. People who want it to be what it is today, what it was, will be frustrated. It'll be a much larger organization. To be successful, it'll be more decentralized. And that doesn't mean you still can't have the same culture. But you can't have a company grow from 200 employees when I was there to 1,000 to more in the future, and more products and more sophistication, and not have change resulting from that.
So we're in the process of creating a kind of a financial services company focused on technology and life sciences with a global perspective that really and truly has never existed in the entire history of American capitalism. And I think that's a very exciting undertaking.
I haven't had the opportunity to get to know very many of the Silicon Valley bankers, but I do know a few dozen. And what I find is that they're a little bit different than the people I've dealt with and my other stops along the way. That they're people who don't see themselves just as bankers, but they see themselves as partners, as creators, as enablers, as people who are direct participants in this information revolution that's taking place in the country.